Abercrombie & Fitch reports a loss in the second quarter as sales slumped 30%. Will the upcoming back-to-school season give the teen clothing retailer the boost it's looking for? Eric Beeder, an analyst at Breen, Murray, Carret & Company, has a hold on the stock. And he joins us now with an outlook. Eric, welcome to Bloomberg News.
Thank you.
What happened to Abercrombie?
Actually, it was interesting results for Abercrombie. If you take out some one-time charges and effects on one of the chains they're closing, it actually was a little bit better than the street, and I think that's why the stock has responded so well today.
Where was the street at?
The street was at a loss of about 7 cents. There was a one-time tax charge, and there were charges for their chain. They're closing the Rule chain, which is a small chain. You take those out, they actually made a little bit of money.
Back-to-school season. We've been talking about it a couple of days this week. Talked to Marshall Cohen yesterday about it. How important is that? And in this economy, discounts are going to be key. People are going to have to continue to try to stretch their dollar. How's Abercrombie going to deal with this? How are other folks going to deal with this?
I think if you look at back to school as an important season, it's also the start of the fall fashion season, so you really have both those seasons coming together. And I think what we've seen so far in listening to managements, and we're in the midst of retail earnings, is that people do want value, but there is still that customer who's going to pay up for fashion. Even Abercrombie mentioned, and we've seen it at Urban Outfitters yesterday, that value is working, but fashion is where people will still spend up. So there is still that pocket of consumers who wants the latest thing they're going to pay up for.
Okay, and of course that brings me to my next question. How spectacular does it have to be for someone to pay full price in this economic environment?
It's got to be pretty impressive. Let's put it that way.
Yeah, very much so.
You almost have this dichotomy between the new and exciting, where the person's going to pay up for it, and basics. And in the basics category, people are just looking for the lowest price. So it's almost a two-tiered system here. Unfortunately, the fashion part of it isn't big enough to overwhelm the loss of margin we're seeing in the basics section right now.
Why is that?
There's just not enough people that are going to pay that money. Right now we have consumers at 10% unemployment they're afraid of, and they're thinking about every dollar they're spending. So you're seeing them splurge, but the splurges are nowhere near as heavy or as large as they were last year.
But again, yesterday, as I mentioned, I interviewed Marshall Cohen, and he made a point that I thought was very germane. In the game of chicken between a retailer and the consumer, the retailer always blinks first.
That's true. I think that this year even more, especially in Christmas, is going to be the key test. We're going to see, we've seen it right now that there is less product in the stores. So less stores open, there's less product in the stores. We're going to see that even more at Christmas time. And so it's going to be interesting to see how quickly the retailer turns tail and runs. Last year they did it extremely early. This year I think they're going to be able to hold out a little bit longer.
Is there a sense that that could be a drain on consumers? You know, I guess maybe going back in July or even before then, was it Sears or one of the other retailers? Well, we're going to start putting Christmas stuff out now, and people are like, you got to be kidding, right? Now it's so early.
They weren't kidding, unfortunately. I think that what's going on here is that people, they still want to spend. They might have less money to spend, and when they do it, it's going to be something special. And in between, it's just nothing. And we're going to see when we reach September, October, and the comparisons get materially easier. And retailers are up against probably the easiest Christmas in at least the last 10+ years, whether they can hold the line. And it's going to be touch and go. I mean, I don't think anyone right now in the retail sector, in my world, has a clue how Christmas is going to eventually play out.
Just a couple seconds ago, you mentioned inventories. How are the inventories looking? Do the retailers have enough stuff on hand?
Right now they do. Let's worry. That's a good problem. Let's worry about that if it occurs. Right now, retailers are anywhere down from 10 to 20% from last year, and that's going to continue throughout the whole year. And so, if the consumer does come back, you might run out of product. I don't think that's going to happen.
What is your prediction for back-to-school season? How do you think
back-to-school is going to be down probably in the low to mid-single digits. I think that we're just going to see less people spend, especially in the apparel side. You're just not going to see the spending you saw last year.
Who's going to be doing well? The Walmarts, the Targets?
Walmarts, Targets, Aeropostale.
Yeah.
You can argue someone very differentiated like an Urban Outfitters, which has done an extremely strong job. There are going to be winners here. I don't think there will be winners on the top line, but there'll be winners from driving margin expansion.
And then very quickly, who would the losers be? The folks who are they're kind of a little bit hesitant. Well, we don't care that things are pretty bad. We have luxury items and we're not going to budge on price.
I think you have names like American Eagle, where we have a sell on it, and we believe they're going to be squeezed between Abercrombie on the high end and Aeropostale on the low end. You can look at some of the high-end players, the pure high-end players. That market really is not coming back right now.
Eric Beeder joining us today to talk about retail and back to school. Eric, thanks. Good to talk to you.